What's going on, you guys? Welcome back to the channel. Welcome back to another one. We are going to do a quick M1 Finance portfolio review for the day. This is Monday, June 27th, and we just closed on the Dow. Currently, the Dow Jones is sitting at right at 31,349, at least the Dow Jones futures. S&P 500 sitting at 3,900, and the NASDAQ is sitting at 12,029. So basically, for those who are new to the channel, this is my M1 Finance portfolio. I started this M1 Finance portfolio to generate dividend income. This is primarily a dividend income portfolio. So basically, 99% of the stocks and holdings within this M1 Finance multiple streams of income portfolio consist of stocks or funds that pay dividends. And you'll find that there are some dividend aristocrats within my list here. But ultimately, this portfolio was created about 2 years ago. In fact, maybe even a little bit closer to 3 years at this point. I have to go back and look. Let me see if I can quickly give you guys a quick idea of when did I start this portfolio. Okay, so here it was. I started this dividend income portfolio with $500 on February 4th, 2020. So what is that? 2 years, 2.5 years. Now, I will be honest with you guys. I have not been contributing regularly to this dividend income portfolio account simply because my opportunities for other forms of investments, such as online businesses, and I started investing in real estate. I found a number of other opportunities that allowed me to generate higher returns than the passive income that I had hoped to generate from this portfolio. Now, mind you, this particular portfolio is down quite a bit from its highs. This portfolio is now sitting at $32,755, and it has a gain of $7,500. So $7,500 is how much this portfolio has made between market gains as well as earned dividends. And so it's been a great source of passive income. I have not been spending the money from this passive income account, but so far so good. Let's see, I've got multiple sectors within this dividend income portfolio, ranging anywhere from healthcare, utilities, telecom, real estate, consumer, oil and gas, industrials, tech, finance, some bonds, and I have this one Invesco S&P 500 high dividend yield. What is this? This is like a ETF. So one of my first purchases was purchasing an ETF because I didn't know much about dividend investing, and I figured, well, hey, since I don't know much, let me buy into this high yield dividend investing portfolio that was basically pre-made. It was an ETF. Now, one of the things that I want to share with you guys today really quickly, we're just going to go over the market real quick, and I'm going to end this video, but I like to look at this account and just kind of see where we're at. Maybe tomorrow I'll go over the exact payouts in terms of the dividends that I've been paid, but what I like to do is I like to look at the market not just because I have stocks in my M1 Finance account that I'm investing, but I also like to look at the market because when you're investing in real estate, when you're creating small businesses, online businesses, side hustles and whatnot, it really helps to understand what the economy is up to. And, we've had a pandemic that we're recovering from. We've had massive supply chain problems. We've had shortages. Man, we've had all sorts of different shortages, and it's created a panic in the financial markets. We've had widespread worldwide inflation. And so with all of that being said, it really, you become a much savvier investor when you have a good understanding of what's going on in the economy. Where do we stand with inflation? Where do we stand with interest rates? What is the Fed doing? You want to work with the Fed rather than against the Fed. Keeping an eye on all sorts of other investments, including Bitcoin, cryptocurrencies, Ethereum. It really helps to understand where the market is going so that you can make the best, smartest decisions. Now, of course, none of this is financial advice, but I have been investing for over 20 years, and I'm just sharing with you guys some insights. Nike reported earnings, and it topped Wall Street's expectation despite inflation in the United States and amid the lockdowns in China. which is a very good sign because many people are expecting a recession to be coming in the next couple of quarters. And to see positive earnings from I mean, this is not necessities. Nike's not making like food, or, they're not producing electricity or gas. These are largely leisure, luxury items, luxury sport items. They're not necessities. Like if you're really trying to save money, you don't have to go buy Nikes. You could buy something else. So if Nike's doing very well, that's a good sign. But it says here that Nike posted better than expected sales and profit for its fiscal fourth quarter. Went on to say in the 3-month period, inventory rose 23% versus the year ago period, driven by longer lead times from ongoing issues with the supply chain. So more on the supply chain in future videos. They said, quote, "We continue to closely monitor consumer behavior and we're not seeing signs of pullback at this time. And so we continue to execute the strategy and the plan that we have, which is working." This is according to Nike's CFO, Matthew Friend. Very good sign from Nike going forward. Obviously, the markets are down from the high of the January high of 2022. We're down about 20% from the Dow Jones, 20% on the S&P 500, and NASDAQ, I think, is down about 25%. JP Morgan and Citigroup keep dividend unchanged as rivals, including Morgan Stanley, boost payouts. And JP Morgan Chase and Citigroup said Monday that increasing stringent capital requirements forced the firms to keep their dividend unchanged while rivals announced bumps to their quarterly payouts. Well, at least they're not cutting back on their dividends, because if a company cuts back on their dividend, generally speaking, the company is more than likely having financial troubles greater than they believe that they could withstand by maintaining the dividend. So the fact that they didn't cut a dividend is a very good sign so far for those two companies. Bank of America said that it was raising its quarterly dividend by 5% to 22 cents per share, which is another good sign for the banks. A lot of people are concerned about the stability of the banks, but recently there was actually a banking stress test performed, and basically across the board for all but one of the major big banks here in the United States, they're all sound. And the one bank that wasn't necessarily, among the top rated banks in terms of the stress test, it wasn't necessarily bad. It was just kind of like just below where they would like to see that threshold. Morgan Stanley said that it was raising the payout 11% to 77.5 cents per share, which is very good. Wells Fargo surprisingly boosted its dividend 20% to 30 cents a share. Goldman Sachs appeared to have one of the larger dividend increases at 25% bump to $2.50 per share. So banks look like they're doing pretty good. The housing market slowdown is showing up in shipping data according to China. I did see in here that, here it is. We're seeing the impact and slowdown across home appliances, white goods like dishwashers and do-it-yourself products. We have seen a major slowdown in furniture and home decoration, especially in China and Vietnam, because importers are heavy in stock. Interesting. Importers are heavy in stock. So if importers are heavy in stock, that means that they're more than likely not getting sales to the extent that they had hoped or usually have. So that means inventories are building, demand is dwindling. And we all know the Fed raised interest rates 75 basis points just recently. Just prior to that, it was a raise of 50 basis points. And before that, back in March, Fed raised interest rates for the first time in 2022, 25 basis points. So we're up 150 basis points since the Fed started raising interest rates. And this is, of course, having a negative impact on the housing market and interest rates. So, there's no big surprise why there's a slowdown in housing. Houses are sitting on the market a little bit longer. And of course, with housing can actually take down a number of industries, including furniture sales, including appliances sales. So we went from shortages to, shortages of food shortages, chip shortages, gas shortages, and now we're transitioning into a phase of inventory buildup, which is kind of weird to say given how many shortages we've dealt with over the last many months. But that's where we are right now. So anyway, guys, wanted to just give you guys a quick portfolio update on my M1 Finance dividend account. Maybe in the next video, I'll go into some of the individual holdings that I hold. Overall, this has been a very profitable passive income dedicated M1 Finance portfolio. And this is the first one of its kind that I've ever made. I've invested in all sorts of other stocks before, but this is the first time I've dedicated a portfolio to literally only holdings that pay a dividend. So anyway, very happy with the performance of the portfolio. I'm encouraging everyone who is considering starting a passive income journey. If you're interested in starting to build a dividend income stream, it is a great form of passive income. And what I like about the passive income that dividend stocks and dividends offer is that you can reinvest those earnings into purchasing more stocks that allow you to make more money and generate bigger dividends every month, every quarter, every year. And at the same time, it gives you the flexibility to say, hey, maybe I need some of this cash. Let me pause the dividend reinvestment or the drip. You can pause the drip and then you can literally just take cash payments. So whenever dividend payments come your way, you can literally just say, hey, send me a check, or let the cash build up in your account and transfer it to your checking account so that you can make purchases if you need the money. If you don't need the money, then a lot of people are essentially implementing the DRIP, the dividend reinvestment program, which allows the dividends to purchase more shares and you build your wealth that much faster. So anyway, if you guys are new to the channel, consider liking the video. Also subscribe to the channel. Thank you guys so much for checking it out, and I'll see you guys on the next video. Take care.